Hello everyone, welcome to this trade breakdown on EU. In this breakdown, I'm going to walk you through this trade that I took on Monday. And as always, I'm going to first of all start off with the higher time frame and I'll walk you through the full narrative and I'll explain exactly how each piece of the puzzle came together and led to the execution that I had. First of all, I'm going to start off with the weekly time frame and I'll explain exactly how I came up with my directional buys on Monday and what was the thought process behind it. So, first of all, if you remember from the previous weekly outlooks and breakdowns, then you'd know that on the weekly time frame, we had taken out this external range liquidity, right? And once we did that, from there, my expectation were simple. My expectations were simple. I was anticipating a retracement profile from here where price would pull back and fill this internal range liquidity in the form of this weekly fair value gap, right? For the past 2 weeks, after we took out this external range liquidity, my short-term drawn liquidity and my short-term target for price was to fill this internal range liquidity and this fair value gap, right? That was what I was expecting for the past 2 weeks. And you can see that that's exactly what happened. The last 2 weeks, we saw a retracement profile lower and we saw a reversal on the lower time frames, right? And we began moving and pushing lower towards this weekly fair value gap. But before we could fill this internal range liquidity and tap into this weekly fair value gap last week, what happened on Thursday is that we had an SMT divergence with DXY. What had happened is that DXY filled this corresponding fair value gap, whereas you can see that EU failed to do so. Let me show you on the daily time frame. What had happened on Thursday last week is that DXY took out this corresponding high, right? It took it out, but EU failed to do so, which means that we had an SMT divergence. And because of this divergence, I changed my initial buys of expecting this retracement profile low, right? And instead, heading into this week on Monday, my buys have shifted and I was expecting higher prices. I was no longer looking for continuation to the downside. Instead, I knew that we had already filled the internal liquidity due to that divergence with DXY, and I was expecting price to expand higher on the lower time frame to target an external range liquidity on the 4-hour time frame, right? That was my shift in perspective, right? And that's exactly how I determined my high time frame directional buys going into this week, right? Now let's drop down to the daily time frame and let's see what we have there. Again, on the daily time frame, we have the same market context and narrative, right? We had taken out external range liquidity. I was then expecting price to have this expansion and this retracement lower to fill internal range liquidity. And last week, we filled internal range liquidity in the form of having this SMT divergence with DXY, right? And then heading into this week on Monday, my expectations for price were to have an expansion higher from here to potentially take out this high, right? That was my drawn liquidity for this week. I was expecting price to have a weekly range expansion higher so we could take out this external range liquidity, right? So on Monday, my directional bias was bullish and I was primarily looking for long trades, right? And bullish entry opportunities. Now, let's go down to the 4-hour time frame and let's see how did I manage to end up with a proper market context that supported and that backed my trading idea. So, on the 4-hour time frame, first of all, what you can see here is that after we had this divergence with DXY, what happened on Friday is that we had this micro and this small expansion higher. And with this expansion higher, what we did is we closed above this particular candle. And you know that this is the candle that filled the internal range liquidity, which means this candle has significance. And now that price has engulfed this candle and closed above it, it means that now we have a CSD. It means that price had a change in the state of delivery And now from here, we can expect bullish prices. And that's exactly what my thought process on Monday was. Because of this CSD, because of this change in the state of delivery, my conviction in this bullish idea and this bullish narrative and this bullish market context increased even more. And I was more determined to look for bullish and long trading opportunities, right? But obviously, as you know, I couldn't just take an entry right away. First of all, I had to wait for the right time, which means a proper key time, a kill zone or a key macro, and then there I needed to wait for a fill of a key level, meaning test of a key level, and I also needed a candle range liquidity purge before I could take an entry. So what I did is I waited. I waited on Monday, and then right here I'm going to define this CSD. We're going to take this uh, open of the candle, right? Just a refined version. Now both of them are correct. You can take the high, the body, even the mean threshold of this CSD. All of them are correct. You just have to refine it based on what you're seeing. So right here, you can see that this candle, particular candle, had tested this order block, which means that this candle is now also an order block. So in this case, what had happened on Monday during the London Open kill zone is we had this normal protraction profile on the lower time frame, and with this move, we first of all took purge this candle, which means we had a liquidity purge here, and along with that, we also tested this for our order block. And the key reference or the key point here is that this happened at a key time during the London Open kill zone. And from this point on, I had a proper market context. First of all, this idea was aligned with the higher time frame drawn liquidity and narrative. Now the only two things left were a proper market context and then an order block confirmation. And now you can see that we have a proper market context on the 4-hour time frame. And now from here, the only thing that was left was for me to wait for a proper order block confirmation entry to be formed. And once that happens, I'm gonna then take an entry. Let's see what happened here. So right here, you can see we had the liquidity purge of the candle. We also tested the candle during this London Open kill zone, right? Specifically at this 3 a.m. hour, we had the purge. And from this point on, I started waiting for an order block to form. And right here, what you can see is that this candle closed above this candle, and this candle purged liquidity and also filled liquidity. And now that it's engulfed, it turned into an order block. So what I did is I put my entry here with my stop loss below the order block, and I targeted a 3-hour trade. And right here, what happened is that price eventually expanded higher, right? Giving me the 3-hour profits, and then I ended my trade right here. That's the trade that I took on Monday. And that was the whole thought process behind it, right?